I think the last webinar I had and attended, one asked me about the Ichimoku cloud and what I thought about that. And I pretty much just shut it down because I don't like it. And I think it's pretty messy, but I did some homework and I have a, and actually I think it's one of those that could make an excellent way to enter trades in a pretty secure way to do that. But we can look at that in a second. We should also we will also look at the parabolic SAR, moving averages, and Bollinger Bands. All of those are trending indicators. They move with the trend and in the direction of the trend. So that should be possible indicators to help you navigate if you want to trade. You'll learn how to use them and what to look for. And finally, we will learn how to optimize trade using those indicators. And let me stress, this is only for educational purpose. So this is not for a solicitation for trading or anything, or us saying that this is a good thing. This is for educational purpose, and you should take it as such. Okay. So the Ichimoku indicator. As you can see, it's pretty messy. You have what we call the cloud. It's this stuff down here, going up here, called the cloud. And the price can either be above or below, or it's trading sideways, as you see here, where it moves inside and out the cloud. The cloud is not that important. It has some meaning, but it's not where the focus should be. And I let me stress too, I will not go through the Japanese names because I think they are irrelevant. That doesn't matter what's it called. What's interesting is the two moving averages you have here, and they are a 9 and a 26. So the blue one, light blue one here, is the 9 moving averages, and the other one, the red or Bordeaux, I think it is a 26 moving averages. And then you have a light blue over here, and it's not that important, but we'll go through how it can help you if you do a trade with this one. And what this is still a moving averages, but we have moved it, slowed it down, and moved it. So this would either trend would the price would be above or below this one, and then you have, of course, if it's a sideways market, it's just going to zigzag through this. But if we take the next one. If you want to use this one, the rules are you can only buy when prices is above the cloud. So no selling from this point here where it moves above, and then from that point it's absolutely forbidden to sell in this market because the risk is too great that you're going to lose money if you do that. And of course, the other way around, only sell if prices is below the cloud. And this is where the it could be if prices is trading within the cloud, then you should stay out, as this is a sideways market, as you see here. You had it here in from April into May, in mid-May, about that. At that point, you just have to be patient and stay out of it. Of course, you can find another market where you can say this market could be traded within the rules that we have, but sideways markets is not allowed to trade that. And And just let me show you up here. What we are seeing is the euro dollar, and it's a 4-hourly chart. And here is just the prices that was when I did this. This was the open price, 121.62. This was the high of the 4-hour. This was the low of the 4-hour. This was a close. And this was how much it moved in points and in percentages. This is the setting of the Ichimoku, and this is the standard setting if you use it. This should be the standard in whatever system you're going to use. It should be those that is up here. It's 9, 26, 52, and 26. And those are just the prices for the different indicators that you see here. And that really doesn't matter much. What matters is only the 9 and 26. That is what is usable for this. Okay, so as you can see here, we have prices above the cloud. It moves above here and stays above. So what we need now is we need a signal when to buy, because we can't just buy because it moves above the cloud. That's no good. You can see it did that here, but just to return down below. So at this point, it should be a sell if you just used it that way. And that wouldn't work for any point of time, and it would just leave you with a terrible loss in the end. So you need now a signal. We are about the cloud, and the signal is this one. You can see when you moved above, you still had you had no signal to go into it, but at this point here, you had the 9 period moving average move above the 26 period, and that is the signal to enter the market. And as you can see here, you had it here at the probably one of those two, and the next bar would be the entering point. Either it's here or it's this one, doesn't really matter. So what you would experience at the first point here is a small loss, but then later, as you can see, everything works out pretty nicely. And when you have the light blue moving above the price, as you see out here, that is indicating that you have a pretty good trend at this point. So at this point, it had moved nicely above the price and indicates that you have a nice trend at this going into this, and it should be a pretty safe trade. This doesn't mean that you can leave the trade without a stop, and the stop in this case would be the low that you have here about the 25th of May. And the price of that would be about 108.50, something like that, just below there. That should leave you with a nice trade going up here, and you can see at no point does the two moving averages cross before we are up here again. So let's move to the next one, because here we should see the possible selling option. And actually you have two. And what you could do is you could use when the light blue enters into the price, as you see up here. That could be a sell option. It's not necessarily the sell point, but it could be the one. And if you sold here, that would be a pretty nice profit. You would have entered the market at about 110, and you would go out about 113.25, something like that. That could be one of them. The second one is when the moving averages crosses again, as you see it here. The light blue, or this one, the 9 period moving averages move below the 26, and that is a sell point too. So if you want to use one or another, doesn't matter. You can do 50-50, doesn't matter. But that's important. So this is the way to use it, and you have the entry point, and you have the exit, and everything is given in this. And I've tried to do a lot of paper trades on this, trying to do a lot of simulation, how it works. And if you follow the rules, it works excellent. The time or the number of time where it fails is pretty small, and often is because one yourself makes a mistake, interpret something about it. So it's important. Let's go over it again. Price has to be over the cloud. That's the only thing that is required if you want to buy. So price, as you see it here, goes over the cloud and stays over the cloud all the time till we have the entry point where the 9-period moving average is crossing the 26 in an upwards direction, and the 9 is now above the 26. So even if you just had used the 9 and 26, that could be it. But the important point when you use the Ichimoku is that you have an extra security in the way that you can see that it's above the cloud. And when you have the light blue here is a 52 moving average displaced by 26 periods. This is above the price too, indicating that we are in a trend and an uptrend. So this should be a pretty safe buy at this point. And again, selling options up here when the light blue moves into the price, or when the 9 moving period average moves below the 26. That's a selling point too. So let's look at some more. Same here. We have the actually I've now if you can see it, let's go back one step. This is June, July. Going on here, June again. So this was the first buy. Still, we are still in euro against dollar, 4 hour. We have a buy here. We are above the cloud. The light blue is moving up, indicating a trend. So you go into the market around here. So that's this one. It's just what we looked at. And exit or take profit up here or here. Your choice, 50-50, doesn't matter. At this point, exit when you had the light blue enter into here would leave you with the best profit, not that much, but still better profit than down here. But that is not always the case, so be aware of that. Then you moved into a period of just sideways trade here. No indication of buying. You had a move here, but still, if you use the light blue as an indicator for being in a trend or not, it's not in a trend at this point, so you shouldn't enter the market at this potential buying point over here. And all of this is just noise, as you saw it before this point here. And the next buying, you see, this is for about 2 weeks you are in the trade. Then you're not in the trade for about a month. And then the next time the market is going to signal a possible trade is over here at July 13. Again, price is above the cloud. You have the light blue is above the price and it's moving higher. And then you see it move and you can enter here after they cross, they do it here. So that's, again, as you saw it on the first one, you start out with a small loss in your trade, but you should have, you enter around 113.25 or 113.25, and you should have your stop just below, I think it would be something like 112.75, something like that. So it's a pretty tight risk, and you should, from this, stay in the trend all the way. You can see it just about touches here, but doesn't really move into the price action. So and the wideness of this should indicate that you should remain in the trend at this point, as the trend should be higher from here. And again, you could exit here, or you could do it with 50% of the position, or you could exit over here at this point. So you can see at this point, it would be equal if you use one or the other. It would be around the same level you would exit the trade. So again, you have the moving average crossing over the 9 period, crossing over the 26. You have the price above the cloud, and you have the light blue here moving higher, indicating a trend. It's moving, it's trading above, not trading, but it's sitting above the price. So indicating that this is a trend that is useful. You could use this to trade. Let's look at the next one. So here I've taken the opposite side just to see how it works. Again, if price is above the cloud, you can only buy. If it's below the cloud, you can only sell. No selling at any point here. If you do that, that's a totally different thing you're doing, and it's no longer this indicator you're trading with. So that's just a reminder. At this point, only buy if price is above the cloud, and only sell if price is below the cloud. So here, all of this, no trade. Again, it's more or less about, it's almost about 3 months if you only trade the euro dollar. So that would make it about 3 months. And you have now we see price below the cloud here. We have the light blue trading below price, indicating that this is a trend. If this is a cross or not, I don't really know, but this is one that if I use this, I would take the trade at this point. And I would exit down here for 50% and down here for 50%. Again, this is when the two moving averages crosses again. So that would be it. And again, you have the same here. You have a sell here at this point. Price is below the cloud. You have the light blue trading below. And then you can see it starts to move nicely down in the beginning, but then moves into the cloud. And it doesn't matter that it moves into the cloud. That is not the point. Now you're in the trade, and the stop should be above here. So let's say you're in the trade around 119, and the stop in this case should be about 120. So it's one figure. And of course, if the bigger the stop, the less the position, you have to manage your risk. And if it was 50 basis point or pips, then you could have let's say, if the position was 100, when it moves to 100,000 euro, and if it moves, the stop moves to 100 pips, then you should have only should have half the size in trading volume, so it should be about 50,000 euro. And this is just an example. It could, of course, be 5,000 euro, and then half of this, if the stop was 100 pips away, would be 2,500. And then it's important to manage that too, because Nothing is 100% safe, and this isn't either. You will run into losses at some point, but there's not many of them. Just let me say that. And again, out down here, and you should have about 200 basis points in profit on this one. So pretty nice trade. Okay, that's about the Ichimoku cloud. Should we take any questions if there are any on this one? Any questions? Okay, let's move on. And if you can always, we can always return to this later if it is you have a question or you think of anything. So just let me say, I dismissed the Ichimoku as a indicator that I would use, and it was only when I did the research going into it to look closely at it. I think it's pretty messy, but you have to just have your priorities straight. Price above the cloud, you can go in to buy. Below the cloud, you can sell. If all the rest is fulfilled as it is here, and I'm pretty sure that you are going to have the presentation afterwards, it would be sent to you if you want it. So I have changed my idea how this works, but this is the only way I have found out that I think it works. And I don't use the cloud for anything else to see if the price is above, below, or just trading inside it. So this is the way to use it in my view. Everything else must be from somebody else. I think this is the way to work it. Okay, the parabolic is pretty much the same as this is the small red dots you see here. They are following the trend. At this point, if you want to trade, you should go with every signal there is, up and down. And as you can see, it would be a lot of trades, and it would multiply, give you a higher cost, and it would give you multiple false trades, a lot of them in here. So just to take a few here, if we take this one, at this point here, you should enter a short position, and you can see it's about 118.50, and it crosses again here at this point, and it's about 119, just above 119. So that was the first loss. Then you have a new one. You should now be long at this point, about 119, maybe 10 or something like that. And you will have a new one here where it crosses, and you should be short here, and it would cost you again. And that is the way this is. And you can change the settings of this to try to find something that works better for you. But as it's set up in the system as a default, is not a system I can recommend. It would not work in any case. And I don't think this is an indicator that is of much use. It's, yes, you have short-term trades. It indicates the trend, and from time to time you catch the trades, and it actually gives you some profit. But there's too many false signals inside, and it will slowly just eat up any profit that you had made on the bigger swings, like you see here. This is a nice trade, giving you a good profit if you were short here. But then you have 2 or 3 or maybe 4 false trades in here, actually accumulating into a small loss, I think. And again, all the costs in doing all those trades are not worth it in my view. So here I just tried to play with the settings, and this you can see here gives you some longer term trades. There's not as many trades, but still you have from time to time where you get really hammered. You have one here, this point, and all those in here. Actually, that's a pretty good trend. It's not any fast moving, it's low volatility, but still it's going down from around 118 to 108. So that's actually 1,000 pips that you lose in this one, because it makes this. And I've made it a longer time frame. So we're now on the weekly. You can see it up here. It's still euro dollar. It's now a weekly chart, but still a lot of trades, a lot of false signals on this one. And I would not recommend it as a trading tool. It could give you an indication about the trend, but that's all from this. And there's better indicators than this one. So it's just to make sure that you have seen it, because it's out there. I know somebody use it, but I won't recommend it. Again here, now I've moved it even further out, so you have less trades. Now it catches the trades better. There's not as many false trades, but still they're there, and still a lot of trades. And now you have, at this one, I've really played around with the pre-settings of the parabolic SAR. Okay, this is one of the most common. We are now at just two simple moving averages, and I would recommend that you use at this. Still, we are euro dollar. It's a daily chart, and I'm using the 10 and the 50. Not necessarily the best, but as you can see, there's not all that many trades, and then they are pretty good, those that are there. You have one down here just before June 2020, and it exits you up here almost 1,000 pips later, and then you have some sideways trading, and if you're short here, you would get out, maybe take a small loss, but then have a nice trend again, catch. If you are doing this, if you are using the moving averages like this, you have to take the trades. You can't say, I don't believe this trade is going to be good, because you have a hunch or anything. You have to be mechanical. You just have to take the trade. You have to use what you see and believe what you see. If you do anything else, that's a totally new trading system that you are adding into it. And if it works, you have to try it, see if it works out the way that you think. This one, it's a mechanical system. When they cross, in this, when you see the 10 period, and this is so the 10 day moving average crosses above the 50, then you have to buy. Here you have to sell. Here you have to buy. Here you have to sell. Here you have to buy. And actually on this one, you had one good trade, one loss, and this would be a good trade out here. And you will likely be more or less break even on this one, would be my view on this one. But you will have had 1, 2, 3, 4, 5 trades, and this period covers about a year. So that's pretty good. It's not a lot of trades, and they are pretty. They are actually making you money using this type of system. But remember, it's a mechanical system, and you have to believe what you see if you use this one. You can't just say, I use it this time and then not the next one, because then you could have this one, you could take this trade and you exit on this one, but doesn't take this one. And this is where the money is made. This is what is going to resist all the other losses that's coming. And there would be a loss here, maybe a break even at best. I think there would be a small loss in this one, and this one would have made up for this more than enough. And what you can do is you can even go, you can expand the time frame going from daily to weekly, and if you want to, you can even go to the monthly. You have to adjust the periods of the moving averages, but the longer period, the less trades you're going to get. And I would not recommend to use this below a 4-hourly chart. It would simply be too many trades, and it would give you too many false signals. So use this wisely, and believe what you see. It's important to do that. Everything else could be pretty costly. So just to recap here, buy when the short period moves above the long period. As you see here, they cross just around here. So whether you buy here or on this one, doesn't matter. The stop should be either here at this one if you go in here, or if it's this one, you would use this one down here. And so it would be something like entering, say, near 109, and you should have a stop about 108, just below 108. And as it moves higher, you can move the stop along with it, either using the long one and get out here, or use when you break above this period of consolidation, move the stop up to the next one, secure you a profit no matter what. And again, here, as you break here, you have the cross, so that would take you out of the position. You would have taken your profit, and you will even sell short at this point. And then over here, you will have to go into a long position again. But it should be a pretty successful 2-3 trades you have here, and you should have a nice profit to work with going forward. And here you can see I've added some lengths to the time frame. This is now a weekly. This time I have a 9 and a 26. You know that from the Ichimoku. It's the same, but now it's on the weekly. And you can see here you have a sell order here. That would be down here, something like that. The sell is giving either there or there. So you have to sell the next one. And the problem with this now is that the stop is pretty far away. So if you go for a long chart like this, you have to manage your risk going into this. So you have to make a minor position, or not as big as if the possibility for putting in a stop was closer by. You simply don't have that. So at this point, you will have to enter into the trade around 117, and you would have to have a stop above here. And that is almost 119.25, something like that. But you will enter at 115, and you will have to exit down here somewhere, and it would be around 112. So still would be a nice trade, and you can see you would be in this trade from around May 2018 to May 2020. So that's about 2 years you would have stayed in this trend. Maybe you would have been out here, still pretty good, and you enter into a buy here, and out here up at again almost a year. So pretty long trades, but still they work, and they work well, and they would make you money in the end. absolutely. But this requires a lot of patience. This is what the big hedge funds use, and maybe often even longer periods than this one. So they can stay in trades for years, and I'm not sure that most of us has the patience to do that. But that's how this works. And you have, again, you have to take it. It's a mechanical system. You have to take the trades when you see them. Otherwise, you would end up doing terribly, because then you would be behind the curve when you have the, say here, if you say, I don't like this signal, I think it's too far away, I don't expect it to come. So when would you sell at this point? When would you go into this if that was your main driver for this? You don't have it. And again, here, if you don't buy here, when would you buy? It doesn't make sense to have a system like this if you don't follow it. So it's important, if you say, this is my system, follow it, go with it all the time. But find out first, does this work for me? Is this too long a time frame? It likely is, but find out if it is, and if it is, then find out what can work for me in a shorter time frame. This might be it, or maybe even down to a 4-hourly chart. I don't have that, but it could be a 4-hourly chart, and then you have more signals, and you will have more false signals. You will have more drawdowns, but still, I'm pretty sure that in the end, you will come out of it with a profit. Okay. Then we have the Bollinger Band, and now I'm really into it, because it doesn't tell you when to enter, or it doesn't tell you how to exit. There is some small rules, as you can see here. When the market is price is undershooting, as it is here for the Bollinger Band, it's often a sign that the next trade or next bar that closes inside the Bollinger Band indicates that now is a turn going to be seen in the market. And you should at least expect the market to move to the middle, and often to the top of the band. But would you trade it as a signal where you want to just buy the next one? I think more likely, if you have, let's take this one over here, if you have seen this, it moved outside, and you would like to sell when it come inside over here, would you have been into the trade all the way down to here? Actually, it moves outside here. So what to do here? Do we want to take those trades? I'm not sure. It's for me, it's nice to see indication of maybe a trend, a longer trend, and often you can use the Bollinger Band as an indicator of how fast a move could be. If the Bollinger Band is going to be more narrow, the narrower they are. It's not a very pretty example, but this one, as you see, it's going, when it goes sideways, and they going to the two bands is going to be depressed and moving closely to each other. When it breaks from that is where you get the big moves, and you could do that with simple technical analysis. You would take two lines and you say, this is the support, this is resistance. When it breaks one of those, go with the break. But it could indicate how strong would the move be. And as you can see in this case, it's pretty strong move after it breaks below support. And yeah, you could go in, but when would you go to exit? It doesn't help you in this when you're going to take the profit from a short position. If you had it there, it could be this one down here, but then again, you don't have to see the move below. How about this one? How would you trade this one if you were short up here? How would you get out of this? that would be difficult because you don't have a move below. You don't see the market otherwise than just it's easy for us to see now because we know what price is going to do. But if you just is down here, are you going to see this again? This maybe you actually don't know. So in this case, again, the Ichimoku is a better one because it helps you into the market and exits the market. Here you have maybe a way to enter, but how to get out. And if you get out, is it a buy signal or is it just the indication of a consolidation or whatever? So it as an indicator, trending indicator saying what's the trend, it's okay. But as a helpful tool, make trades, I don't think it's any help to you, and I wouldn't recommend it as a trading indicator. But a trending indicator is okay. So I can see there are some questions here. Let's see what the chat says. Stop. Somebody said. So I'm going back here. Demo. Now you had a question about patterns. Actually, we did have a seminar, I think about a month ago, actually about patterns and how to trade them. I don't think it would be wisely to look for any here. We can take a quick one. If you see here, you have a top formation here. You have the shoulder, head, shoulder. You have the neckline here. And when it breaks the neckline, you can enter the market. So, but it's pretty much the same if you just said I had, just a second, I would go into, take a pen down here. See, you have the shoulder, head, shoulder here. You have the neckline here. So this could be a trade to enter, but then where do you get out from this? It would be difficult because you don't have any real move to get out, not before this one breaks around here. So you will only have maybe this as a profit. And this one would be a simple cup with handle. And you can see it breaks here. And actually you should go into it and you have all of this and then move back into this. But if you enter the market here at this point, the stop should be below here. So that's important to know, and that's a pretty mean stop, entering the market at 136 and have a stop at near 129. I wouldn't be happy to have that in my in the way I trade. But again, I think I would find something that would help me from this. It's a valid pattern. It's not invalidated, even though it goes below. It's only invalidated if it goes below here. And I don't know if you know it, because if you have a shoulder, head, shoulder like this, when it comes down here and maybe even breaks, if it turns back like this, up through here, then the price goes, this is the expected decline from when it breaks. Should be something like this. But if it goes above here, you have a reverse signal, and this would still be the same distance, but you should have it up here instead. But yeah, not more about that. We had a seminar about patterns about a month ago, so so let's move on. What do I have? All the I don't have a YouTube channel. I think all of the previous webinars are available. Please ask Marilena about that. Otherwise, you could have the presentation. I'm sure that she would love to send them to you. And if she doesn't have them anymore, she can just ask me. I have them, so should be okay. Is support a buy or sell when it breaks support or resistance? When it breaks resistance like this, it's a buy, and when it breaks support like this, it's a sell. And it's important to have those and know what they are. That should be just to let it. So if you have this one, this would be a sell signal at the point when it closes below the neckline. And again here, when it closes above here, that would be a buy price or buy signal at that point. But the problem here is you have pretty far away stop because you enter in at this point. I'm pretty sure we could find a better one. Maybe over here, it's pretty much the same. You have here sideways, and then it breaks higher from here. And actually here you can see the Bollinger Band is helping you trending this way. It's not that clear over here, but here it's becoming pretty clear that the uptrend is there. You're moving inside the upper side of the Bollinger Band, but all of this requires that you have made some, that you have seen this, that you have tested this. When does this work for you? Again, you have to find out, when does this work for you? Do you have a trade plan and everything else? So I can see that Marilena put up the YouTube. So yes, it's on there. Perfect. Nice. So again, up here, this would be resistance, and maybe it would break down and make this a shoulder head shoulder. It could also just be breaking down from here directly. It doesn't have to be a shoulder head shoulder. It can make whatever. This one is one of the difficult because you probably know those as a V bottom, and they are difficult to trade. You don't know when they are there. Maybe you should be aware of the risk because this was a terrible decline. This was in March, just about the corona. So this was a really strong decline, and therefore the possibility or the risk of a V bottom, as you see here, was bigger than if it's just been a slow moving market. Like not that we have any really here. This one here is not that strong. Okay. Any more questions? Doesn't seem to be any more. Perfect. Then I would say thank you for today, and hope you enjoyed it. Again, the presentation would likely be sent to you, or at a later point be put up on YouTube for InstaForex. So that would be perfect. Thank you, everybody. Have a great evening.